Hello friends, welcome to the price action guide. So today we will do Nifty analysis and we will see how the trade setup is going to be for tomorrow. So first we're going to put Nifty on a daily chart time frame. If we observe closely, this first candle was a red one. Then this second candle is a green, which is covering the red candle. Now what does that mean? This means that there has been a bullish engulfing that has taken place over here. For bullish engulfing, this green candle should open somewhat below, or let's say around this red candle's opening, and then it should close higher and it should engulf the previous red candle. So if we check, it has closed around 16,520 and it has opened around 16,523. So that is approximately the same level, and this candle has engulfed the previous candle. So this shows that there is some positivity in the market, and we can also see, if we put it on hourly time frame, that as I told you guys, this met the resistance on the upper side and it came back. So the Nifty is still in the channel that I have showed you on daily time frame. I'll go back there again. So Nifty is still in the channel. Now as we can see, there's still a bearish pull and flag pattern that is information. I have this perception there is a high probability the market will come and fall down if it breaks this middle line. If it breaks the middle line and retests it and comes back, then there is a high chance that market will come down. But since there's a lot of positivity in the market also might go up somewhat around here, and if it has to come back, it will take a resistance either from 15,800 or 15,700 and it will come back again. Till then, uh, the market will be slightly bullish because of the short covering. So now we will look about the market view on some other factors, based on some other factors. So as we can see, this is the dollar index. Now you can clearly see that dollar index is decreasing. Now when the dollar index is decreasing, that is good for our markets. The markets will go up. So if Nifty breaks this level, that is around 106.4, then there are chances that market will be bullish. So sorry for a moment. So this line broken downwards, retested, and then again downwards will be a bullish signal for the Indian market. Also, if this happens simultaneously along with the Nifty crossing 15,800 and retesting it and going back up, this will be a sign that markets are going to get bullish. Now we will verify our view with option data. As we can see, for the expiry of 28th July, 16,600 has this much number of additions done. That is 14,48,400, and on the put side it's 15,98,300. So 16,600 is having approximately equal addition on both call and put sides. So this is the equilibrium line Now the highest, so the support that is placed is on 16,500, where you can see that 25,42,000 puts are being added and 9,73,000 calls were added. So that is puts are at least 3 times of the calls, as you can see on 16,500. The next resistance will be this 16,700 and then 16,800. So these are the level of resistances that we have to look. If these levels are broken, then we can expect a huge bullish run, especially if 16,800 is broken, because here you can see the call is at least 8 times of the put being added. Now we'll see the PCR. Our current price, spot price, is around 16,597, that is 16,600. So we'll see the PCR over here is 0.73, which shows that market from here is having a slightly bearish view. But then 16,550 and 16,500, these are having PCR greater than 1, which shows that market might take a support at these levels. So we have seen all these data. Now we'll see how to trade on Friday. So for that, we'll go on our 15 minutes time frame. Before that, we'll go on an hourly time frame. We'll see that market formed some sort of double top, but it broke and went up. Now since this double top pattern is broken, now we can see that it is forming a head and shoulders. It might form a head and shoulders pattern and it might come down from there. But if it goes and breaks the channel, then it has some chances that it can go up. Now, how I will trade in these market condition is that if we see a gap up or a gap down, especially if we see a gap up around 16,700 or 16,800, I would look for a rejection like triple top or head and shoulders or double top, any sort of price action which shows that the market is going to reverse from here. I'll take a short side position. I'll put my stop loss at least 40 to 50 points on spot, that is 20 to 25 points on options, and the targets will be these levels. Similarly, if we see a huge gap down around 16,300, then as we can see, this is a gap, there is a gap. So what can happen if there is a gap down? Market might come over here and take a reversal from here. So if there is a gap down and market sustains above 16,380, 16,400 and makes a double bottom or an inverted head and shoulders or any price action pattern and goes up, then I'll take a long side call. I'll put my stop loss somewhat around over here at the bottom of this candle, and the target will be these levels. Now, in case of both gap up and gap down, if market goes either above this level 16,800 and sustains and goes up, I won't be interested in taking a long side call. Similarly, for short side, if market comes down below 16,380, stays for 20-25 minutes and then breaks down after a price action, then we'll take a short side position. Stop loss will be again 40 to 50 points on spot, that is 20 to 25 points on option. Now, the best case for us will be if the market opens flat, then we'll wait for a rejection from these levels, or we'll wait for a support from these levels. So these levels are very crucial. Please keep them in mind. Also, there is a high chance that if the market reverses from here, it will still continue its movement in the channel until unless it breaks it either downside, or if it goes up, then until unless it retests the channel and goes up, we will not say that market has broken this channel. So this was my view for Nifty for Friday. Thank you so much for your precious time. And if you really like my analysis,